Hello, everybody. Happy Monday. And today was a short day in the stock market because it is President's Day. So the market closed at 1 p.m. Eastern Time, I believe. So I want to go over why it is important to use cumulative delta in your trading strategy, but also go over the only trade that I took today in the market as well because I was very patient. It actually took virtually 3 hours to take my first trade after watching the market. So let's get right into the importance of volume. So looking at the trading view, we had pretty much an inside day. We've got this doji candle. Tomorrow will be a better indicator, I think, of where this market is going. But let's look at the 1 hour, and you'll notice as we look at the sessions here, we didn't really do much. Closed inside of the London session still. We did sweep below it and saw somewhat of a push up, but nonetheless, no major move was made nor created. And that's to be expected on a low volume day, which is the purpose of the cumulative delta. So as we look at the 15-minute chart, we had a nice move up here after the market open, but the wicks tell the story of the day today. And let's jump right into the 5-minute chart so we can see that visually. And of course, hindsight is 2020, calling the bottom here. We retested the prior day close, which is this red dotted line, closed above it and moved up. But look at the wicks for the first, let's say 5, 10, 15, 20, 25, 30, 35, 40. Look at like virtually the first hour of the market was brutal, even though it was a clear move up. That's because these wicks were going crazy on such low volume. So on Tradevate, I use the volume delta grid setting right here, which is this grid down here. But the only unfortunate thing is you do have to zoom in quite a bit to see the volume. But I will look at the volume from regular trading hours on the 16th here. Look at the volume on these candles. 500, 600, 500, 300, 600, right? And that's right at the market open here on the 14th, I'm sorry. And then let's also look at the volume on these moves up. 400, 300, 100, another volume event, 500. So that's what you can expect on normal trading day volume. Now, let's look at market open today, which was right here after this push up. And honestly, the best move was the pre-market move down. Had decent volume early in the morning, and then it tapered off substantially. So you had 400 here, 200, and then the volume virtually dies thereafter. Even on the major volume events, you don't see large candle body moves. So as we're looking at this, these wicks are literally going in each direction because the volume is so thin that if anything hits the bid or the ask of decent size, it's going to move the candle pretty quickly. And this is why you have to be very selective in your trading. But also, too, if you're watching the delta and you're seeing this, it's clear confirmation that you do not want to get into any position with significant size or anything that you're going to be married to in terms of a bias. One or two contracts max if your drawdown allows, maybe a little bit more, but I wouldn't trade more than one or two contracts. And even as the day progressed and we moved into a close, this was a fantastic setup right here. But even on these doji candles, 33, 61, incredibly difficult to read in terms of which way you want to go. And as you zoom in on this, even if you took this doji candle and you had your stop below this, boom, you're already out. Same thing here. If you had your stop below, you're out. So the moves up and down, either way, were virtually sideways, even though the market moved up, even though it closed inside of the London session. So with that being said, that's the importance of watching cumulative delta as you're looking at volume and your trading setups. I'm going to move this over here and talk about the only trade that I took today. I do have the fills on so you guys can see those as well. But as we jump into the trade, I was watching this area at the bottom of the volume profile around the 22,190 level. This was around the prior day close as well, which was right here. We swept below it. But I wanted to specifically see if we would get back into this range where we had a little bit of an imbalance between 94 and 98. So roughly a 4 to 5 point imbalance. I thought that we were going to retest this at some point. This candle here looked promising, but we ultimately ended moving up. And even if we look at the 1 minute chart, which is what this is, as we're looking at these wicks, you could still tell that this is brutal. And I have the VWAP bands on just to kind of look at what the standard deviations of the moves might be. We never even tested the upper end of the VWAP here. But let's get into the trade. So you can see I was patient virtually from 9:30 all the way to 11:23. So as we're looking at this, it all pretty much starts with the RSI. So this was the large move up on the RSI that pushed us above VWAP with conviction. And you'll notice that we pretty much stop right about here on the RSI. We have somewhat of a flag on the way down. So this is what I'm watching, and not in real time, but as I'm looking at this price action play out, we have a flag for a move up. We didn't really retest the bottom of that flag, which is what I was ultimately going for here to move back down towards VWAP. And as you could tell with my trade, I was roughly 10 minutes early on the perfect move down, but it is what it is. So we have another volume event that pushes the volume up higher. What do you notice on the RSI in this case? Here's that candle. And as we draw a line, it's virtually the same, showing that the market really wasn't ready to move much higher. Now, I was already out of my trade, but let me go walk you through what I was looking at with this. So we had a hammer candle followed by another move down, and then our third candle here, which wasn't too much of a convincing move down, but on the move up, I was like, okay, we're going to retest this, and then we were going to push lower. The move I actually thought was coming actually took place later, but here's the move. Bought two and sold two here. And you'll see it was a net profit of $110, nothing too crazy, but sold at 46 and bought at 43. So that was a nice little move down, as you can see right here. But the real move would have been perfect based on this. Now, mind you, I had a client appointment that I had to get to at 11, so I wasn't, at noon, so I wasn't able to watch this whole thing. But look at this volume push up here, right on the RSI, significantly lower than these two volume moves up. This would have been the perfect entry to hold all the way down to the VWAP test. Unfortunately, we did not get there. And on a holiday with very thin volume with sideways price action, I wanted to take what I could and get out. So that is the video for today, guys. Just something to watch with cumulative delta when you're looking at your trade setups. RSI has been helpful too in terms of finding the relative strength around a key level or a potential rejection. So that's the purpose for today's video, guys. Any questions or comments, please shoot them down below, and I'll see you in the next video.